Are you compounding wealth or are you compounding mistakes? Tax planning is one of the most overlooked ways to grow and compound your wealth. Just think about it. If you save $25,000 in taxes this year and invest it, it could grow to over $100,000 in 15 years. But if you ignore that tax planning and keep overpaying year after year, you're compounding those losses instead of gains. Welcome back to the Wealth Planning Podcast with Brister Law. I'm Anthony Brister, and today we're going to be talking about one of the most misunderstood yet powerful tools in building and preserving wealth. It's tax planning. Now, before you zone out thinking taxes, that sounds boring, let me promise you, this isn't just about filling out forms or crunching numbers. This is about using smart, proactive strategies to save you money, reduce stress, and help you make informed decisions for your future. So let's dive in. Why is tax planning so important? Let me ask you this. Have you ever been surprised by a huge tax bill at the end of the year? Or have you felt like you're paying too much, but you don't know how to change it? Well, you're not alone. According to a recent survey by the National Endowment for Financial Education, around 62% of Americans feel completely unprepared for tax season. But here's the thing, tax planning isn't just about getting ready for April 15th. It's about making intentional decisions year-round to maximize your deductions and minimize your tax liability. So you need to align your tax strategy with your financial goals, and you need to be proactive about it. For example, if you're a business owner or real estate investor, tax planning can mean the difference between paying thousands more or using strategies like depreciation, retirement contributions, entity structuring to legally lower your tax bill. And that's why we're here to explore today. Now let's talk about some of the biggest myths surrounding tax planning, because trust me, I've heard them all. First, tax planning is only for the rich. This couldn't be further away from the truth. Whether you're making $50,000 a year or $5 million, tax planning is about keeping as much of your hard-earned money in your pocket as possible. For example, contributing to health savings accounts, HSA, or funding a 401k are basic strategies almost anyone can implement. The second myth, I'll deal with my taxes at the end of the year. That's a big mistake. Tax preparation is reactive, while tax planning is proactive. If you're waiting until December or April 15th, you've already missed most of the opportunities to reduce your tax liability. A good strategy looks at the whole year and even the years ahead to map out those smart decisions and be proactive and plan out to actually reduce that bill. And here's one more for the skeptics. I don't need help with taxes. I can just use an online tool like TurboTax. Look, I love technology as much as the next person, but tax laws are nuanced. For example, did you know small business owners can claim a home office deduction, but the way you calculate it depends on specific IRS guidelines. Missing small details like this can cost you thousands. All right, now let's make this real. I want to share with you a couple examples that illustrate just how powerful tax planning can be. We just worked with a business owner who had been operating as a sole proprietor for years in an LLC. By restructuring their business as an S Corp, we're able to help them save over $15,000 a year in self-employment tax. That's money that they could reinvest into their business or put it back into retirement. But that's also money that they lost every single year that they were in business and making that much. Next up, take a client who had multiple rental properties but wasn't taking depreciation to its fullest. By implementing a cost segregation study and real estate professional status for their spouse, they shaved off thousands, tens of thousands actually, and the results were almost immediate. These aren't loopholes, they're strategies built right into the tax code, and the key is knowing how to use them to your advantage, and that's where working with a professional team makes all the difference. So how can you get started with tax planning? Well, here are 3 actionable steps you can take right now. First, you want to evaluate your current tax situation. Take a close look at your last year's tax return. How much did you pay? Was there any deductions missed? Kind of understand where you stand is the first step to improving. That's why we always look at your last 2 to 3 years of tax returns when you come on board. Second up, you want to work with a professional, partner with a tax strategist, like the team at Brister Law. They give you access to strategies specifically tailored to your situation. Whether you're an individual, a business owner, or an investor, having a tax strategist and an expert in your corner is a game changer. Third, plan ahead, don't plan behind. So start thinking about your taxes as a year-round process. Create a plan around retirement contribution, charitable giving, and how to reinvest your profits and ways to minimize your tax liability. The bottom line is tax planning isn't just about saving money, it's about taking control of your financial future and making your money work smarter for you. The key is you've got to take control and you've got to make it happen. So that's it for today's episode of the Wealth Planning Podcast with Brister Law. I hope you're walking away with a better understanding of why tax planning is one of the most important and powerful tools in your financial toolkit. If today's episode sparked any questions or you're ready to take your tax strategy to the next level, visit our team at Brister Law. So go to our website, bristertaxlaw.com, schedule a free discovery call, and ask about the comprehensive consult. Thanks for tuning in, and remember, when it comes to taxes, a little planning today can make a big difference tomorrow and for the future generations. Don't forget to like and share this with someone who may need it, and we'll see you next time.